spotlight event for Local Enterprise Week is proudly brought to you by the Local Enterprise offices and supported by Enterprise Ireland, the local authorities and the Government of Ireland.
Everybody, and I'm delighted to welcome you here with us this evening for our masterclass with Blaise Brosnan. And of course, Blaise needs no introduction to many businesses out there. As you know, Local Enterprise Week, it has gone virtual for 2021, and it kicked off on Monday at the start of the week. So we're now on the final end of Local Enterprise Week, which has been a successful initiative with over 200 events organised right across the length and breadth of the country by all the local enterprise offices in your area. This year's schedule, as you know, has included 10 spotlight events. And indeed, on behalf of myself, Liz Hoare, as Head of Enterprise here in Wexford, and my team, we're delighted to be hosting tonight's session with you all. This year, as well, as part of our events, we have a competition for a €200 voucher. So all you have to do is to use the hashtag Making It Happen, and you could be in for the prize of a €200 voucher. As you know, the Local Enterprise Office is at the front line of providing a range of supports to small and medium enterprises. And we're just going to have a quick look now at some of the supports that are available to you. Okay, I know there seems to be a bit of a sound problem there, but basically, I suppose, as you know, your local enterprise office is here to help, whether it's for training, mentoring, financial grant aid, or directing you for more information or advice. Please make sure that you contact any of the staff across the network of local enterprise offices. So tonight we're here, as I said, for the masterclass with Blaise Brosnan from the Management Resource Institute, who is going to give us a presentation tonight on health checking your business for its forward journey, with a particular focus on working capital. But before we join Blaise this evening, I'm delighted to be joined by an entrepreneur, like many of yourselves. And we have our very own Leo Wexford client, Ryan Margolin, who is Chief CEO with his business Hair Professional Labs. And Ryan is going to tell us a little bit about his journey to date, the challenges, as we know that all businesses have to overcome, but also how he has looked to innovate what he is doing and has looked at the opportunities for growth and really to keep on top of the competition to make sure that he is responding to industry needs. So I'm delighted to welcome you, Ryan, and we'll just hear a little bit about your own story first. Thank you, Ryan.
That's great, Liz. Listen, thanks a lot. Hi, everyone. So, look, I could talk for hours and hours about some of the background of the company, or the reasons why we've chosen to go into certain lines of products and stuff. But I mean, realistically, in a world that's changing over the last year in all shapes and sizes in business, with COVID, it's been a huge challenge. A short bit of the backstory. So we're in a family business. It's myself and my two brothers and my father. My father was the one who originally started the company. And the foundations of the company were built upon safe products. My mother was a master hair technician for years. Her and my father had a hair replacement studio in New York. And over the space of a decade or two, my mother got chemical poisoning from the products that she was using. There was, even with proper ventilation and everything, the industry wasn't regulated the way it should have been. And the companies that were responsible for manufacturing the products they were using were not adhering to, good practices. So a lot of the chemicals that were used in, much heavier amounts than they should have been created a big problem for a lot of people in the industry. So my father sold the hair replacement studios. My mother retired early, and he committed to creating the foundations for a safe product line in the industry that they were operating in at the time. So he kind of pivoted his view of everything, really, and he started working with a team of chemists that came up with a base formulation that took quite some time to actually get going, and eventually turned into what is now a very popular industry. And that took a long time to break down. So this company has been going since 1994, originally in the States. And in 2009, I decided, when things kind of took a downturn in Ireland around the original crash, an opportunity arose to go over and take a look at, some of the challenges my dad was facing in the business. So I moved over with my wife and my daughter at the time, and that was in April of 2009. And I spent the first 6 months, looking at the business, learning a lot more about it, about the operations. And we changed just a few really, in my eyes, were key things around marketing, messaging, and branding. And within 18 months, we tripled revenue. So we decided that, we've had a good run now over the last 18 months. The world is a big place. Where would be one of the better places to, set up a distribution and manufacturing facility? And we chose to open one here in Wexford. And since then, it's grown strength to strength. We've kind of taken the whole foundations on which the company was built, which is safe, reliable, effective, high-performing products, and we've really become the industry leader in our space. And with that, we our focus over the next 12 to 18 months is to expand our contract manufacturing services to bring that same methodology to the beauty industry. So a lot more skincare, a lot more hair care, health products in general. So we're really focused on that at the moment. We've just acquired another 12,000 square feet in Rosslare Harbour to facilitate that expansion. And that's really the simple part of the story to kind of bring you up to speed where we started from to where we are now. We currently have 10 people employed in Rosslare, and we also have another 12 people employed in the States with 2 subcontractors as well. So that leaves a total team of 24. And so look, that's really all there is to say about that. Over the last year, as we've all experienced probably much of the same thing, we've had our challenges. Last year when COVID hit, we weren't deemed an essential company, so we had to really make a decision to pivot very quickly. We had the manufacturing facilities and capabilities, so like most companies did who were in the position, we contributed by manufacturing hand sanitizer. And that's led us to work much closer with the governing bodies to develop better products and safer products and products that are just better for the skin in general. So that's opened up a whole new avenue of products for us and opportunities. With that said, on the cosmetic side of things, we've also started to create a lot more benchmark products to offer our customers, our current customers and new customers. So a lot of the lead generation that we're building at the moment is focused around helping other brands get started in the industry. We know more than anyone I suppose the challenges that come along with starting up a new business. Startup costs are a huge thing, and especially in the cosmetics business where manufacturers want to, they want to, they require you to order a very large amount of product. So we've always been a very flexible company in terms of our private label service, and we want to bring that same methodology into the contract space, which we're working on at the moment. So it's not so much as if, we're taking the approach of where we're a manufacturer and this is what the minimum quantities are. what product do you want? Here you go. This is more about, for us, about we understand what you're trying to do. We want to facilitate that, and we want to help you contribute to an industry that does have its challenges with poor quality products, and allow you to do that with a much lower minimum quantity. It's almost more like a partnership rather than a just selling to somebody and that's the end of the relationship. We help you focus on your branding. We could help you focus on your marketing. We can help you focus on your messaging. We have the capability to do all that because we've done it before and we've set the systems to do it. So that's where we're at right now. And that's what's really exciting for us, is that, hopefully coming out of this, even though we're going into a new normal, coming out of this over the next 6 to 7 to 8 weeks, hopefully, the rest of Europe and the rest of the world can open back up, and we can start getting back to some sort of normality. So that's really where we're at the moment. And in terms of challenges, I mean, putting COVID aside, IP is a huge thing. Making sure your brand is protected. We've made a lot of mistakes along the way. Our trademark has been hijacked in a couple of countries. That created huge problems with us for counterfeit goods, and we were getting hammered, for the last 18 to 24 months with a lot of counterfeits coming out of China, selling the product, which is very poor in quality, at a quarter of the price. Now we're trying to flip the tables on that and take advantage of that situation, and utilizing our trademark rights in certain countries, which we now have. We're trying to flip the tables and actually bring some of those companies who were supplying counterfeit products that they didn't know into our own funnel, and start supplying legit products. One of the ways we've combat that is we've started to launch our own counterfeit app, which we've custom developed. So that's going to allow us the ability to create custom QR codes with QR codes that can't be repeated. And through our front-facing app, the end user can scan the code to make sure it's a legit product. And if it's not, they can report everything about where they purchased it from. We can see the track of where it's been supplied from. So much data that goes along with it. So it's going to make it very difficult for companies to counterfeit our products, or eventually any of the products that our clients decide to manufacture with us. We can help them protect their brand. So it's a very fast-moving industry, very fast-paced, and just as quick as the challenges come up, we have to deal with them. But there's always another one at the end of it. It's almost like that feeling, like it's your business isn't truly growing unless it always feels broken. There's always going to be something broken as you grow and you scale. You just have to put the right foundations in place and processes in place to deal with those as they happen. So that's really it. On that, Liz, I unless there's specific questions, there's not much more to contribute at this time. So yeah, I'll let you take the floor back.
Thanks very much, Ryan, and indeed for sharing your experiences and your journey along the way. And one of the things that strikes me is a day is never the same for any entrepreneur, person who's running their own business, but also that adaptability to be flexible and to evolve. And I think really your story tells us how much you evolved. You've developed a really quality brand. You're very proud of your product in the market, but also the need to protect that brand, and how you've used technology to protect the integrity with your IP and that. So thank you very much. And what we'll do is we'll have a question and answer session at the end of this evening, when we've heard from Blaise as well, and people can just put their questions afterwards in the chat box and we'll get through them. So thanks very much, Ryan.
Thank you. Thanks.
So now I'm delighted to introduce our masterclass. This is our second masterclass in Wexford here with Blaise, and the first one went very well. And in fact, I think it's a testament to Blaise himself that we've had over 200 businesses register for this evening's event. So no pressure to you, Blaise. And Blaise, as you know, is with the Management Resource Institute. He's had a wealth of experience, over 25 years working. So there's nothing that Blaise hasn't seen in terms of issues facing entrepreneurs. And he's with us this evening to share some helpful tips to us, particularly in the area in terms of health checking your business and after the year that's been in terms of working capital, and how do you manage cash flow, which is really critical to businesses. Blaise himself has also worked as a strategy senior specialist. He graduated with a master's from Trinity College Dublin. He's a founder director of the International Dispute Resolution Company, which specializes in providing alternatives to normal litigation routes. In recent years, Blaise clients have always requested that he would create a resource which he could impart much of his unique and valuable knowledge and wisdom, which he will share with us this evening. He also has written a number of books, including the very engaging one, You Are the Limiting Factor and I Dare You, just to name a few, which really challenge us in terms of as business entrepreneurs. But really, Blaise, to summarize, brings a wealth of practical, and I think that's very important, and theoretical business experience to each of his roles as an entrepreneur, as a business director, as a business consultant, and indeed as a mentor. So I'm delighted, Blaise, to hand over our masterclass to you. Thank you very much.
Okay, thank you, Liz, and thanks for the introduction. I hope I can live up to that introduction. Yeah. Tonight, I want to kind of focus in on, I suppose, the guts of our business, because everything we do in our business eventually washes out into finance. So that'll be kind of the core of what I want to get across tonight, but I'll walk around it a small bit. So I'll share a screen with you there because it is a masterclass for maybe about 20 minutes or so. And when we have that done and gone through that, then we can, as Liz says, we can have a question and answer. And any questions you want to ask, I'll have a go at trying to answer them as best I can. So if you don't mind, I'll share a screen with you. I won't bombard you with too many slides, but they just help me to keep a bit of structure to what I'm about to do. So can you see that slide there, Liz? Yeah. Okay. Now, my view of the situation at the moment is that we're in a better position than we were 6 months ago or even 3 months ago in relation to the COVID. And the reason I'm saying that is that now there's a race on between the vaccine and the virus. 3 months ago or 6 months ago, there wasn't a race. And for months you have a race on, even though the V for vaccine is smaller than the V for virus, there's still a race on. And as any of us that have done anything in athletics will know, there's always a winner at the end of the day. And my view is that eventually the science and the vaccine will beat the virus. When I can't say for definite, but I would be kind of, I'm a lot more optimistic today than I was 3 months ago in relation to it because of the race situation. Okay, one of the things that I'm myself kind of interested in over the years, because I come from an economics background in some ways, is that everything tends to go in cycles. And this cycle will pass too, same as every other cycle. And I think it behoves us as business people to make certain assumptions about the future. And the assumption we have to make really is that there will be, this cycle will pass on as all cycles do. And in a few years' time, to be just a memory. So each of us as business people, we have to work from the point we're at, but we have to work on the basis of making certain assumptions about the future. And I want to kind of focus you in on 3 kind of planning timeframes, I think, for our business. One is the immediate one between here and the end of lockdown. The second one is the twilight zone between when we come out of the COVID cycle and for about 18 months after that. I think that's going to be a critical period for small business in particular. And then the more strategic long-term view. And as business people and we need to have not alone basic assumptions about those 3 time frames, but we do need to put in place the appropriate action in relation to making sure that our business is there for the long run so that it can achieve what we want it to achieve. So my message from that slide there, it's a bit mixed, but my message from that is that everything goes in cycles. And I think that's a good thing. So where are we in the cycle? If you look at the COVID cycle, where are we? We're probably all at different stages of it. I remember coming back from a business meeting in Tipperary on the 16th of March of last year. And little did I know coming back that day that was the last day I was going to be physically in front of a client for quite some time. So initially there was a bit of shock in relation to it. Then we went through an anger stage. People then go through kind of a rejection stage. And I would like to think that as business people, we're at the kind of the acceptance and the healing stage. Now, different people will have different views about these things, but the better business people that I come across, our work or whatever, they're very much towards the end of that cycle, and they're kind of focusing in and trying to get their business themselves and their business ready and in a more slick form in relation to being fit to exploit the opportunities that will be out there. And there will be opportunities. Liz mentioned I was doing a masterclass on Monday, and I think I mentioned during that masterclass, I'd be quite optimistic myself in relation to the post-COVID period. And my reasoning for that is because of the pent-up demand that's out there and the amount of money that's currently on deposit in the banks by individuals. There's roughly 20 billion more on deposit today than there was this day 12 months. And as soon as a bit of light and the vaccine starts to win the race with the virus, I think a fair proportion of that money will come out. Now, the challenge for us and the opportunity for us as business people is, will we be fit to get our fair bite of that? And that's, I think, the challenge and the opportunity for us. One of the things I think we have to be very careful about in relation to our business is there's certain variables within our business, and I'll cover those as we go on, that we have a good bit of control over. There's some variables within our business that we can influence in our favor. And then there's other issues that should be of interest to us, but we can do feck all about it, really. And one of the things I think as owner managers, as business owners, it's a smart thing, I think, to distinguish those 3 levels of influence. And what we find is that the better business people tend to focus in on the variables they have some control over, and they don't get too hot and bothered about some of the macro stuff that they have no control over. But we also come across people who are so preoccupied with the macro stuff out there, and they're listening to every bit of news and analysis and all this that's going on, and they're doing their head in. So if you want to be smart and a smarter business person, try and identify the variables that you have some control over, and try and do something, come up with an action plan that will make you better in those areas. And if you do that, then you'll have a better outcome at the end of the day. And we'll look at these things now. So what are the strategic options that are available to us as business people, right? There's 2 main kind of categories. One is defensive strategy, which, in a depression, people tend to get very defensive about things, but not everyone. Others, the other side of that then is what I call an offensive strategy, is where you're taking a more optimistic view of the future and looking at the opportunities that are out there for you. And in the course of our work, and I'm sure that Liz and Bridge and in their work with clients every day or whatever, you'll get those 2 categories of people. And we have a choice as business people to decide which one of those two boxes. What's our mindset? Are we very defensive, negative, battening down the hatches, all of that kind of thing? That's generally the earlier part of a cycle. But I think we're coming into a cycle now where it beholds us as business people to start to become more offensive. And by more offensive, I'm talking about looking at the opportunities and that going forward, deciding what type of a game you want to play going forward or whatever. So we look at some of the variables within those two categories there now. So on the defense, I'll put them all up first and I'll talk them through then. Okay, many of the variables here within your business, we have some control over. Okay, and I'll just go through some of them. If you look at your profit and loss account, for argument's sake, the first figure in your profit and loss account is your revenue figure. And that's made up of two things. It's made up of the number of widgets that you sell by the average price per widget. Now, if I was to ask you genuinely here tonight, do you know how many units or how many widgets you sell in the year? And if you, and you know, there's about 200 people maybe in on this call tonight, right? I would venture to say that about 20% of that 200 would be able to write down that figure for me. Now, it's very hard, lads, to be able to be successful in business if you don't know how many widgets you have to play around with. That's the first thing. The second area that we find very weak with a lot of SME business is their pricing. You know, fear is holding back a lot of people in relation to pricing. Somebody was asking me there the other day, they're bringing stuff to the UK and that, so there's customs duty on it and there's some extra VAT and things like that. And the question she was asking is, should she be passing that on? Or should she absorb it from her own margin? And I know her business, and she's a reasonable businesswoman. That's why I put it, right? But the last thing that she needs to do is absorb it from her own margin, because that's just the slippery slope going forward. My contention is, and again, we're at this game a long time, my contention is that nothing is as price sensitive as we think it is. But if we're poor dealers, or if we don't have the confidence in relation to ourselves, we'll always assume that whatever we're coming to the market with is more price sensitive than it actually is. And I said this to you as well. If the only advantage that you have on the market, or the only perceived advantage that you have on the market is based on price, I would say for the majority of you on this call here tonight, you'll never create wealth if you think like that. Our advantage in the market has to be based on something other than price. And I'll come back to that in a minute, right? So if you look at your profit and loss account, what are the variables that are impacting on that? There's three variables basically impacting on that. You have your selling price, you have your purchase of raw material if you're a product type of business, and you have wastage in relation to it. I was just looking at a set of accounts with a company not so long ago, and I would just know, and they're quite a good company, but I would know from their accounts, because I'd have access to other people in that type of business, that their margin was about 5% wrong. First of all, they didn't know that their margin was 5% wrong. Secondly, 5% actually meant nothing in their head. But when I converted that 5% into actual money, based on their turnover, it was about 145,000. And the owner of the business, when I started talking about money as distinct from margin or percentages, he understood money. And we went through it in relation to his purchase price of his raw material, it's a manufacturing business, his selling price, and the wastage through the factory. And when we broke it all out and kind of analyzed it, he was able to tell me, and he has proven it since, he was able to tell me that he could easily purchase maybe 3 to 4% better than he was doing at the moment. Why he hadn't done it before, I'm not too sure. They went through the lean system in relation to cutting down on some of the wastage going through the factory, and that gave them about another 1.5%. And on his pricing, there are 4 salespeople in the company. He's one of the 4 salespeople. And when we looked at the pricing, his pricing on average was 3 or 4% better than any of his salespeople. So the market was not the limiting factor. It was the salespeople were the limiting factor. And when you put it all together, now there's only kind of 3 months of the trading gone since we changed it. But I believe that they will put in excess of 200 grand onto their bottom line in a full year's trading. And this is, this is not rocket science, lads. This is managing some of the variables we have some control over. Okay, other things like efficiency in their situation, the volume, the number of widgets going through the system and that. So the point I'm trying to get across to you here is that in your business, and we should be using the kind of the opportunity of the COVID to stand back a small bit from our business and say, what are the bits I have more control over? And what am I going to do about that? And how will that impact on my bottom line going forward? And I believe there is plenty of room there for improvement. So on the offensive side, then we look at it. See what you can do. Sorry, we see what you can do there, right? The first thing to start always with is your target market. And, none of us, and it's very unlikely there's anybody around the table tonight, who has enough capacity to go what we call the scattergun approach to the business. If you look, and any of you that have done the management development program or anything like that, you'll be very familiar from my explanation of kind of utilizing the 80-20 rule within your business. And everyone should have what they classify as a sweet spot customer. And by that I mean it's the type of customer who matches in with your business very well and who you can make money out of. But my experience out there with a lot of small businesses that we tend to spend too much of our resources with bad customers. And what's a bad customer? A bad customer is somebody who shouts loudest, shouts most often, and probably won't pay you at the end of the day. But we strive to keep them quiet. And I would say one of the messages you might take away from tonight is be very aware that the loud minority don't dictate your strategy for your business going forward, because they will if you allow them to do that. So you're offering then to that target market. Are you in the commodity end of the scale, or are you in the differentiated one? And by differentiation, I mean is, what is the angle that's going to give you the advantage on the market? And I'm saying the challenge for you and the opportunity for everybody around this table here is that your angle or your advantage on the market has to be based on something other than price. It could be good customer service. Ryan talked there about intellectual property. That gives him an advantage in the market. For others, we don't have registered the intellectual property, so we have to do something. But as Michael Porter would say, it has to be something that's relevant to your customers, that your customers are dealing with you because of. And we need to know what that because of is and how sustainable that is going through. The other thing that we find out there in relation to it is if you have your target market, you have more clarity about your target market. And Ryan, when he was doing his presentation there, gave us a good idea of the target market that they're after. And he gave us some sense of who their sweet spot customer, the profile of their sweet spot customer. And this is where we start, okay? Then you have to set some smart objectives for yourself in relation to those target markets. And again, there's a very strong correlation, in my view, between somebody that sets what we call smart objectives for themselves versus those who have wishes to do things. There's quite a difference. And most of you are familiar with the concept of smart objectives, but not, lots of people know the theory of these things, but they don't necessarily use them as tools within their business. So be very specific about whatever it is, put a measurement in there and put a time frame in there. And there's a concept in business, and it's so true, and it's very relevant to my presentation here tonight, is what gets measured tends to get done in our business. And the opposite side of that is what's not measured tends not to be done. And one of the most important things you'll ever do for your business and for the success of your business going forward is to decide what should you measure. And we'll have a look at some of those now in a couple of minutes. We can measure everything, but we should look at what are the real drivers in our business, and we should have a measurement about those and plot ourselves and judge ourselves against that going forward. So why do companies, I'll put all these up and I'll talk them through them. Why do companies fail? There's many reasons. Trying to be all things to all people is deadly. We can't be all things to all people. And if you really want to be more successful going forward, you need to become known for something. In other words, you need to specialize in some shape or form. If you're another Joe Soap down the road and you can't be any different from another Joe Soap down the road, you'll never make money. You'll make a living, but you'll never create wealth. Over-dependence on a single customer, there's exceptions to these, but as a general rule, I would say that's difficult. Overtrading is a term that accountants use. And basically what it says is that you're trading at a greater speed and extent than your capability of financing that. And we'll see where that cash flow and working capital comes from in a minute, right? I won't go through each of these here, right? Choose a business that's not profitable. If you look at your own business, is your business a good business to be in? It's a hard question. It's a question we should ask ourselves. Some businesses are impossible to create wealth from. And the worst business any of you can be in, and some of you won't like this now when I tell you, but the worst business you can be in is a business that's easy to get into. The best business you can be in is a business that's actually difficult to get into. Because if it's difficult to get into and you can get in, the people behind you can't easily get in. And it's like pulling up the drawbridge behind you. You have a niche of that market around you. And when Mine talks there about intellectual property and that, and his trademark and things like that, that's kind of the equivalent of that, because somebody can't use that trademark and that reputation out there in the market. And because he has that, that gives him a bit of protection in that space, okay? Okay, I haven't time to go through each of those individually, right? Now, I don't know when you were in the car last with all this confining to 5 kilometers and that, but the last time you drove through traffic lights, I came up to traffic lights, there was 3 lights. There was a red, a green, and an amber. Now, when I ask most people what do you do when you come to the amber light, I would say 80% of people respond, they put the boot down and keep going, okay? Now, in our business, we also have traffic lights. But for most of us, except we have fairly sophisticated management information, kind of technology or whatever, for most of us, the traffic lights or the lights don't actually show up in lights. They're there in figures, but you have to go and try and work them out. So what is a green light in our business? A green light in our business is something that's going well. But we need to know why it's going well, and we need to understand, is there more we could do in that area? An amber light, again, what the book tells us, if you're going further, a driving test is you're supposed to slow down, except it's unsafe to do so. I think that's what the book says, right? Now, it's the same way in relation to an amber light in our business. So how does an amber light appear in our business? So if you take out, I'll give you just one or two examples. If you take out your profit and loss account for the last 2 or 3 years, let's assume you're in business for the last 2 or 3 years. And let's assume your margin 2 years ago, 2 years ago was, let's say it was 53%. Last year, let's say it was 51, and this year it's 50. Now, you might say, a bit of a trend there or whatever, and put down the boot and go. But we need to stop and watch those trends, because that's a trend of an amber light that's starting to go red. And depending on your turnover, that 2 or 3% can be the difference between really having a good bottom line and not having any bottom line at all. And this is why, you know, I know the majority of you don't come from an accounting background, but you don't need to be an accountant to understand some of these basic things. And, you know, for many, and we come across them every day, you know, people, they don't look at their accounts are too historical, you know, they don't have good measurement, they don't have good management information systems within their business. And a lot of it is a feel. No, a feel is good, but a feel backed up with good evidence is even better. And obviously, a red light that appears in our business is when we have a real problem, but it's too late often at that stage. So what do the good guys do? The good, more kind of top-down business people, they have some mechanism to allow them to identify where the green lights are in their business, where the amber lights are appearing, and obviously the red, they've no choice, but that's a kind of a disaster situation there. So we look at some of these lights now, right? In a minute, right? One of the questions I'm often asked in relation to business, you know, and this is all professions, I suppose, have that jargon. And part of the jargon, the medical people have it, the legal people have it, the accounting people have it. And one of the terms that they tend to use is working capital. And people often say to me, what in the feck is that? I hear people talk about working capital and all of that. And sometimes I'm too shy to ask somebody, but I'm asking you anyway. Could you just tell me in bog English, in Kerry English, what does working capital mean? It's very simple, lads. It's the money that's flowing through your system day in, day out. It's the money in and the money out. And it's very same as the blood in our body. If the money flowing through your system is not flowing at the rate and at the quantity-wise to support the level of business that you're doing, you'll really run into problems very quickly. And there's a few reasons why we have a problem with working capital in our business. Some people will blame the banks because they won't give more overdraft or whatever it is. That's part of the problem. But again, there's a number of variables within our own business that we can identify and do something about that will help that working capital situation. And I'll give you a couple of golden rules now in relation to that. Just before I do that, I'll just show you how the cycle works in relation to a particular business. So a company buys in stock, they do something with the stock, and they sell on credit. So they create a debtor. Eventually, they collect the money from the debtor, that's cash in. They'll pay their creditors, who are their suppliers, and the revenue and everybody else. And if there's something left, that's for you. Now, what happens, and this is where the overtrading that we talked about a while ago comes from. As a company starts to scale up, and if that's the kind of model that the company have, that it's not a cash business, it's they're selling on credit in some shape or form, and they're a manufacturing business. They don't even have to be manufacturing, just a work in progress type of business or whatever. The quicker you grow that business, the more money you need within that business to support that product. Otherwise, you'll go bust very quickly. There's no quicker way to go bust in a business than to run out of money. I've seen plenty of businesses over the years that went bust, not because the technology was wrong, not because the guys themselves were really wrong, not because the market was wrong. They went bust because they ran out of money. And why did they run out of money? We'll look at this now in a second. So what are the golden rules? The golden rules in relation to money in our business are very simple. But because they're very simple, people break them every day. So my simple rules in relation to the money in our business, first of all, it's based on a couple of principles. And one of the principles is the same piece of money can't be in two places at the one time. It can't be in your bank account and somebody else's bank account at the same time. It can't be in your bank account and tied up in a machine or work in progress or stock at the same time. The other thing is we should match. Say if you're making a capital investment in your business, buying a machine or doing a fit out or whatever, right? Will you be very, very slow to use your own money to finance that? Because one of the golden rules is if you're buying a machine that might last for 5 or 10 years, try and finance it with money of 5 to 6 or 7 years. In other words, match the funding for the investment with the useful life of that investment. And the reason for that is because if you use up your day-to-day money in a fixed asset, whether it's a van or a machine or a factory fit out or whatever it might be, in a month's time or 2 months' time, you may need that money to pay debtors or to buy in more raw material or whatever it might be. And it's always easier to get money against an asset because there's security there. It's more difficult to get money for working capital. There's a company not 100 miles away from where I'm sitting at the moment. And it's a good company. But if they made a fatal mistake a few years ago, no different to anyone else. Well, it wasn't fatal, but it was near enough fatal, right? Where they tried to finance their capital expenditure from their cash flow. And they had done it before and got away with it. And you'll get away with lots of things if everything goes right. But as we know in business, not everything goes right all the time, as Ryan gave us a good example there earlier on, right? But in their situation, it didn't go right. And they had all this capital expenditure, they had most of it paid for, and they couldn't make the payroll. Why? Because the money they had was tied up in machines and technology and all this kind of thing. They made a fatal mistake of trying to finance capital expenditure out of day-to-day funding. Now, in their situation, with a lot of maneuver and all that, we were able to get them to refinance that capital expenditure and release that funding back into the business. But I know several businesses out there that have very near come to the wall by making the same mistake, and be very, very careful in relation to that. The other thing in relation to those of you whose model is that you're selling something on credit and collecting the money afterwards. And what people don't realize is if that's your model and that's the model you're working with, right? You're not, the game you're in actually is in the present game. You're giving gifts. Because if we sell something to somebody on credit, the reality of what we are doing from a cash point of view is we're lending money to that person to buy our product or our service. And one of the things that we find when some of our private clients, and we're spending some time with them, and when I look through maybe a debtors list, an age debtor list with a company, and if you're working in a kind of a geography area as I do, kind of 100 miles radius or whatever, and you'll be dealing with lots of different companies in that space. And if you had access to the debtors list in a number of different business houses, you tend to see the same names coming up in the same columns. And I've often, you get to know the names after a while, and I've often looked through some of these lists and I'd see a name and I'd say to the owner of the business or the financial controller, whatever, if that person came into you and asked you for €100 loan, would you give it to him or her? Oh, Jesus, no, you couldn't do that. And I'm looking at a debtor list there that might owe that company 20 grand. But you think they give them €100 loan? No way. What's the difference, lads, from a cash point of view? Same thing. But we, in our heads, one is kind of a trading thing, and the other one is give you a loan to somebody or whatever, right? Be very, very careful, because if you don't do that, you'll have problems. So what's the solution? The solution is that, and what we would recommend, particularly for those of you that have tight in cash, right, is to do maybe a 6-week or an 8-week flowing cash flow statement. So what is a cash flow statement? Very simple. You're plotting the money that's likely to come in against the money that's likely to go out. And you have an opening balance and a closing balance. You don't need to be an accountant to do this. And the reason I'm saying a flowing cash flow is that when one period is finished, you add another period to the end. So you never come to the end of it. Now, for those of you that might get most of your money in on a monthly basis, or most of your money going out is on a monthly basis, you might, instead of do it on a weekly, in a 6 or 7 weekly basis, you might maybe do a 2-month or a 3-month forward cash flow. But the very same principle, that it's a flowing chart. And again, and I'm not, this is genuine. My next statement is real genuine. I know business, quite a few businesses out there who wouldn't be in existence today only for doing this. Now, you could do this in the back of an envelope if you want to. So if somebody says to me, I don't know anything about computers, I don't know anything about anything, very little, I couldn't do that. Every one of us could do this, lads. Now, if you set it up in an Excel sheet, it's a bit easier. But don't use the excuse that you know nothing about computers or whatever to do this. Do you have to be 100% accurate in it? No. But it gets back to a principle I spoke about earlier. What gets measured tends to get done. If we forward measure the best way we can what the likely inflow of funds are over the next number of periods, what's the outflow of the funds, and put it all together on a chart, I guarantee you that you'll have a far better business going forward, and you'll stay in business long enough to be successful. If you don't do it, there's a fair chance you won't be around. Okay, so what are the kind of the flashing lights in our business? We have all kind of the common ones that you'll be all fairly familiar with: gross profit percentage, net profit percentage, creditor days, debtor days, all that kind of stuff, right? You're all fairly familiar with that. But I want to go on to look at some other ones, right? And these are the ones, types of ones, these are just examples, but these are the types of kind of KPIs or indicators that we should be looking at. You know, would you know, all of you around the table tonight, if you were to write down, what are your sales per employee? Would you be able to write that figure off the top of your head? Would you know your sales per square meter of shop space, if that's the game you're in? Would you know your sales per euro spend, a promotional spend, if you're into that game? Sales per product type, if you have different products, have you a way of working out which categories of products or which categories of business are giving you the real return, or is it all mixed up in a pond and got lost in the middle somewhere? Sales per customer category, and there's others. And each of you have to look at your own kind of scenario and say, what type of measurement would I need to be plotting on a constant basis going forward so that I can have a better business and be in control of my business? And because it's very dangerous to scale your business if you don't have the basics right. You know, if some of you and entrepreneurs are great, they're fantastic at opening gates of opportunities and all that. But if you're kind of that right-brained entrepreneurial type, which is fantastic, will you, for God's sake, make sure you have a left-brained type of person in the vicinity around you, behind you, to tidy up after you and control things? And this is why it's so difficult to be the owner-manager of a small business, because we're all good at something, but we have to do things. When you're the owner-manager of a business, you have to do things you don't like doing or that you're not very good at. Now, when you scale your business and build a team, you can get the balance within the team. But when you're a small operator, you're trying to have balance within yourself, and that's not very easy. There's two more kind of KPIs and measurements I think everyone in business should have. And one is what we call the key money. In other words, what does it cost you? What did it cost you this morning to open the door of your business at the gate of your business? And again, if I went around the table here tonight, I would guarantee you that only about 20% of you, at the very best, could give me that figure. And I'm being generous when I say 20%. And the second figure you need to work out, and it's very easy to work that figure, I'll tell you how to work it. If you take out your profit and loss account and look at your total overheads and divide your total overheads by the number of trading days in the year, that's the figure. Put in a buffer of about 10% to cover you. You don't need to be a genius and an accountant or anything to know any of these things, lads. But we need to know. And I could give you, I don't have time tonight, but I could give you lots of live examples out there where people are running their business just based on these two calculations. The second calculation is, what sales would you need to generate today based on your margin in order to cover that key money? Because you're only making a surplus beyond that point. We had a guy on the, I'll just diverge for a minute. We had a guy on the Management Development Forum a few years ago. This guy can't read or write, but by God, he's a good businessman. And he runs his business, and he knows, because I calculated with him and his wife, his very good wife, and she's great. She's the balance in his situation, right? And we worked out the key money, which was real frightening for them, and the production unit type of thing. And he knows that the number of widgets that have to go through his production facility every day before he's starting to make money for himself. This guy can't read it right now. But he knows, and his target is that there's enough widgets gone through his system by 4 o'clock every day. And if there's that number gone through, he knows every widget that goes through his system after 4 o'clock is for himself. Now that's not rocket science, lads. But how many of you around the table tonight have thought through your business in that simple way? Are you depending on your accountant to come back 6 months after the year end and say, Jez, that's not great? Something else here, the accounts come back and they'll say, Jez, the accountant must be wrong or whatever it is. The accountant is generally not wrong, lads. It's we're wrong. And it's our business anyway at the end of the day. Okay, one other thing, and I don't have time to go into tonight, but again, in business, you should have a retirement planning process. Every business should have an exit strategy. Things like family succession, transition from one generation to another, inheritance tax, all of those things. They're all part of your business. They're all part of that kind of working capital and the finances of your business. And the health of your business is critical because it has implications all over the place for you. I won't be too long, Liz, about 5 minutes maybe. I'll try and finish up. Okay, this is kind of a summary of everything I've been talking about. And the first one I put down there is positioning. And by positioning, I mean, many of you will have heard the concept of strategic positioning. What it means in bog English basically is what kind of where in the market do you want to position your offering? Who out there has the pain that you have the solution for? Because that's the game we're all in, lads. We're in the solution business, and we need to find somebody that has the appropriate pain for our solution. And if you get a good match in there, you have a fair chance of having a successful commercial business. The second one I'd said is setting those SMART objectives in relation to how far you want to drive that and monitor your progress against it. Again, getting back to the concept I talked about, what gets measured tends to get done. Do you see the CA there? That's what we call competitive advantage. In other words, what is it? Say if I take Ryan's business there, he has a competitive advantage based on science. They've come up with some type of formula, for just your Ryan, that gives you the advantage out there in the market and is protected then with intellectual property or whatever. Now that formula, Ryan obviously won't tell us or shouldn't tell us or whatever, but that's the angle that's giving him the advantage in the market. Now, the question for the rest of us is, what angle do we have that's going to give us that advantage in the market? And sometimes it can be something that's quite simple. Other times it has to be scientific based. You know, if you're in the service business, you know, it could be your customer service and kind of the mood of the market or whatever it is. But each of us have to look at our own situation. And the way to get real evidence of this is look at your best customers, your sweet spot customers, and try and fathom out why are they and you getting on so well. And that's the profile. If you want to scale the business, then it's customers that satisfy that profile. That's where your resource should be going from a marketing point of view and a promotion point of view, not a scattergun approach. None of us around the table here have enough resources to go a scattergun approach. But we have the evidence within our own business. If we kind of dissect out and understand our better customers and better understand why is that match working? There's some reason. And that reason, lads, is not based on price. It's based on something else. Again, depending on what business model you want to operate, then there's two kind of basic business models, I suppose, out there. One is what we call a CapEx model, is where you do everything in-house, basically, or you sell a product, a machine or whatever, and get paid for it. The other one is what we call a recurring income type of model, a subscription model. And for some of you, it's if you're able to do it, it's a fantastic model. Now, it takes maneuvering to get going. It has an initial ferocious appetite for working capital. But if you can get over that cycle, you're getting into a point of predictable income going forward. And if anyone, you know, if it's suitable for any of your business, have a serious look at it, because that's what really puts value into your business. And there should be a time frame on those, right? I think this kind of summarizes another thing for us. And we're saying there to be like a post up. Be like a post up. Stick with one thing until you get it there, right? Don't be fighting too many battles at the one time. Don't follow every opportunity that comes. I had somebody on to me yesterday, and they'd be quite, he'd be very innovative type of a guy. And by the time we were finished, he had 10 options. He had 10 possibilities. That's his problem. That's not an advantage. That's his disadvantage. And if he rang me today, he'd have probably another 3 or 4. So his limiting factor is not coming up with options. His limiting factor has to be about knocking out 9 of that 10 and deciding which one are you going to go deep in. If you're going to go all over the place and you're trying to satisfy everybody, first of all, you won't do it. And certainly the person you won't satisfy commercially is yourself. If you try to be all things to all people, you'll never build a sustainable business. And this is why I'm saying to you, we need to understand where our advantage is. We need to be brave enough in order to understand the value we're bringing to the customers. And we need to be brave enough and professional enough to come up with a model that will work for us. And don't be over sensitive to a loud minority that will want you to do everything. And that takes on. So I'm back where I started, but now I have a big V at the top and a small V at the bottom. I believe that within, by maybe summer, late summer, whatever, that race will start to come in our favor. Now, we have a bit of time between now and then. So what is your plan of action to trade in that, what I call that twilight zone, which will be the 18 months or so after the COVID crisis as such, where a lot of the government supports and that will gradually be withdrawn or nullified or whatever. I think that's going to be quite a dangerous period from a cash flow perspective, a working capital perspective in relation to business. And what's going to happen, and I'm predicting it now and I'm trying to warn customers now, there'll be pent up demand, there'll be a massive amount of activity going on going forward. Now, if you don't have your model right in a workable way, you could easily get caught in the activity of that increased demand and run out of money if you're working the wrong model. So my strong advice to all of you is, will you do, if you're not doing it already, will you do that revolving cash flow statement? And if you want to become, this is my last statement, if you want to become a one-page manager, a one-page businessman, a person, that's the page. You could burn every other page on the place, lads. You could run your business based on that one page, that cash flow statement, that revolving cash flow statement. And if you do that, you'll be around and you'll succeed in the long term. If you don't do it, you may not be around. So I rest my case, Liz. I'll come out of this here now. So back to you, Liz. Yeah. I can't hear you, Liz.
Okay, so thanks a million there, Blaise, and certainly you gave us plenty of food for thought, but also I think, you know, cash flows and accounts can scare some of our business owner managers, and I think what you've done is given us a very practical guide that, you know, if you were to take the message of cash flow, know what your business is about, you need to know what's the money going out, what's the money coming in, and what do you need to survive. And certainly that idea of a one pager for all our entrepreneurs out there, I think that's really important advice. Also, just to say the positivity is there, and it's about as well, we've come through a tough period, but spring is in the air, green shoots, and, you know, as you said, the vaccine is on the way, and definitely in terms of the deposits, also the fact that there is a build-up of demand there for people, and I think the consumer as well really wants to get behind local businesses as well, so I think that's important. You also highlighted your mindset is very important, and really to try and focus on those things instead of getting caught which is difficult to do in the negativity cycle, but to try and look and focus on what you can control in terms of moving forward. And certainly you gave us great tips there in terms of the traffic light system. I think everyone can relate to that idea of the green, the amber and the red. And, the big thing I took out from tonight as well, and it's very true, is that what doesn't get measured generally doesn't get done. So I think that's certainly even something I'll be bringing back with myself. So look, we've plenty of people on tonight, Blaise, and my thanks as well to Ryan. So we're just going to look now and see plenty of questions there forming. So I'm just going to go up here to the top of these. They're flying in here. So just start at the very beginning, plenty of things in. So to start, so somebody's just saying here about, in terms of that question, do you know how much it costs you to open up in the morning? So someone is highlighting they did this recently with their accountant, and they worked out it was €2 per minute for every minute of every day to run their business. So it really makes you think when you have that information. Blaise, people are wanting to know, do you run courses outside the Leo? So Blaise's details are, I'm sure, available.
Yeah, no, we do all the courses through Leo, but we do it, as you know, Liz, we do Wexford, Wicklow, Kildare, all the southeast kind of a thing, right through across the Cork or whatever it is, right? We don't, because, I decided a long time ago, 20 years ago, that we do that management development program. We developed it specifically for the kind of the Leos around. And there's about 4,000 people or business owners that have done that program over the years. It's not the same program. We keep adjusting it along the way, but if anybody wanted to do the program, they should contact their local Leo office.
Yeah, contact exactly. Contact your local enterprise office, absolutely. And somebody just talking about the value, they pay somebody just to do 2 hours a month for them to look at their costs and targets, and that has made a huge difference. Not only that, it's actually helped this business increase their profits by 35%.
I'd well believe it. But when she's, I don't know, is it a he or a she, but when they look at that costing, they also need to look at that pricing.
It's me, it's Monica. I'm the one that's been given out about the reference to lads and guys, and I'm saying there's loads of girls here tonight as well. So let's
don't worry, and don't worry, a lot of our Leos, we have our Women in Business Network, and we've International Women's Day, so we're celebrating everybody, male and female entrepreneurs.
Yeah, no, and people who might want his details, he works in FTC Waterford. His name is Cornelius McFadden, and he's a thorn in my side, and he's the best thing that ever happened to the business. We can't afford a full-time resource, so we pay him 2 hours a month, and I call it my Weight Watchers Day, because he goes through all of the sales in and money out and cash flow and price per minute and all that. And it's painful, but then it's lovely to see at the end of the year when you see your costs coming down. And we did a big thing on pricing with him about increasing our prices by 10%. So your money, your prices are going up and your costs are coming down, which means you make much more profit. And like Blaise said tonight, I couldn't believe the impact it made. I was at nothing for the first 5 years of the business until this guy came along. And he's not expensive, so go find him on LinkedIn.
Yeah, no matter what he charge you, he'd be great value.
Yeah, but he's certainly help you get going, like, until you can afford to pay him a few more pounds. Anyway, great session.
There's a testimonial, folks, and you can actually manage it, like you said there, in terms of taking it in smaller chunks as well. Blaise, plenty of chat coming in about how people have found it a great session with the straightforward talking and great tips for people. So people were saying they found it fantastic, Blaise. So you're certainly living up to the bar the expectation we set for you tonight. I think one of the things virtual, Blaise, I do think you'd have had a loud round of applause and for tonight's session. So I'm just going through them all. Everybody thanking you, very helpful. I think I'll have to get a job as your PR manager here, Blaise, with all this. So people are saying the key takeaway for them is cash flow projection. And even if they do that basic thing that you said, Blaise, about that 8-week, just sitting down and looking at that and taking that time.
But the main thing about that, Liz, is, it could be 4 weeks. The whole idea is that it's revolving, right? It's so when one period is finished, you're adding a period to the end of it. So you never actually come to the end of it. And it's a very simple document. And if you can't do it yourself, get someone to show you how to do it. But you don't need to be an accountant or anything to do any of this. And it's like the cash through our business is like the blood through our body. And if that stops, we cave over. It's the very same in relation to our business,
We also have thanks as well to our guest speaker, Ryan, and fellow businesses congratulating you, Ryan, on your great success. So a great ambassador for our business owners out there. Great advice. The sweet spot, the customer, that's a golden nugget. So thanks very much. Great, people enjoyed it. Thanks to Blaise, great presentation. Solid, straightforward. Also a very important point here that's been raised, Blaise, about, which was very thought-provoking, about the loud minority shouldn't dictate your strategy, and that is really very true.
Yeah, it's very true, yeah. And because, the man above couldn't satisfy everybody. So how in the hell can we do it, right? And what we find is that people that tend, when they kind of come to terms with themselves and their business, they don't, they run the business in a more professional way, and they don't be looking over their shoulders all the time. The biggest weakness in small business, in my view, is trying to be all things to all people. And the word no is one of the most critical words in business. The first time that any reviews say to somebody, we don't do it that anymore, Joe Soap down the road does that. That's a eureka moment in your business. Okay. And some people never get to that point.
We've somebody here asking Blaise, what is the tipping point to take on your first employee and not worry about the cash flow situation and keep getting paid yourself? Have you any tips on that?
Again, it depends on the revenue, obviously, right? We should only take on costs parallel to the revenue that we're capable of generating. Otherwise, you have to have a buffer funding if you're taking on costs. And coming out of the COVID situation, depending on the speed of it, my advice to companies, that be slow to take back people until such time as the revenue is there to pay them. Okay, and one of the, I suppose, bits of advice I give to people and to owner managers in particular, right? A lot of owner managers I see out there, they satisfy everybody else. They satisfy the payroll, they satisfy creditors, they satisfy the revenue, they satisfy the only one that they don't satisfy is themselves. And you'll never really build a business properly if, as the owner manager, you need to come up the queue. You shouldn't be at the back of the queue all the time. And some of the best people that I know, they pay themselves well, they pay themselves first, and then they have no choice but to run a good operation. But what do most people do? They do it the opposite way around. They pay themselves, they don't pay themselves very well. They take whatever is left, and then they have a nice handy excuse. I'm not getting much out of it, so I don't have to run it very well. Now, if you want to be a bit more professional about it, I would say turn that on its head and do it the opposite way around.
Good advice.
Yeah, just give you an example on that, and it might be useful to people. Some people probably had me telling this, giving this example before. But we have a client up the country, right? There were two lads that started the business about 20 years ago. And there were two engineers, highly qualified guys. They were coming out from one of the multinationals, and they decided anyway that they'd start their own business in that kind of space, right? But from day one, they decided they'd give it 5 years, and if it didn't work, they'd close it. But one of the things they did, from the first month they opened, they wrote a check for themselves, salary checks. Now, they weren't able to cash them, but they wrote them. And for the first 18 months, they weren't able to cash any of the checks, but they wrote a check every month. And to me, that was a mindset that they were going to force the business to pay them. Now, the business did pay and paid all those checks afterwards. But you see the mindset they came with from day one. They were forcing that business to make sure that the business was going to be run in a way that they could pay themselves. And it's a very, very successful business today. But part of it is the mindset that they started off with.
Absolutely. We've a question here, Blaise. Where can I get industry average margins for my company?
Yeah, it's a very good question now. And there's no one source for it generally, right? But one of the things that we'd suggest for people that have done the management development program, they'll know this. We would suggest that if you're in business, you should set up and try and build a relationship with somebody else that's kind of in your business, but is far enough away from you that you'll never be in competition. And try and go through kind of a courtship stage where people get kind of comfortable with each other and start to share figures like that, right? It's a form of benchmarking, okay? Your accountant, whoever your accountant is, might have access to sets of accounts for others in that kind of space. They might know one of their colleagues that would have it. So you kind of have to gather it informally rather than formally. Now, big companies spend a lot of resources in pulling this kind of data together so that they can benchmark themselves against the average or the best in class in their niche of the market. Now, that's fine for them because they have the resources to do it. But I think equally for a small business that don't have those resources, I think we can come at it a different way by forming a relationship with somebody that's kind of in our space, but is far enough away from you that you'll never be in competition. And the reason that it works, and I know several other cases where it works, whoever you might have that relationship with, they have the same hunger for that information you have. And you'll find that you'll be better than them at certain things. They'll be better than you at other things. And when you bring the two together, it's amazing what can happen.
So it's a win-win, mutual benefits for all.
But you have to put in the effort to go and get that courting partner, basically, you know.
We have actually a question for you, Ryan, from somebody here who wants to know, when you developed the app to verify your products, did you do that in-house or did you have to outsource it?
Yeah, so the concepts and the hierarchy and the structure and the ideas of the app were all developed in-house. But when it came to the actual development of the app itself, we did outsource that. Coming from a digital background, I have a very wide array of contacts all over the world, India, Philippines, US, Europe. And literally they have their expertise on different platforms and different ways of building. So I suppose in short answer is the idea and the hierarchy and the structure was developed in-house, but the actual development was outsourced. And the reason for that was that I had spent so much time understanding what was going on in our space in terms of the counterfeits of our products. And I had been through a number of lawsuits at that point with different companies, and I had seen the way that they were setting up their foundations to penetrate the marketplace with our products, which were not our products. So it was only, it made sense that I was the one who built all of that out at the front end and then allowed somebody to develop the idea into a physical product.
Another question for you, Ryan, was you had mentioned difficulties with IP, and they want to know what sort of mistakes did you make so that people can learn from that, from your experience.
Yeah, so that I could talk for hours on that, but I suppose a bird's eye view of it is make sure that you choose the right IP firm to work with. So when we were focused on growing our brand, we didn't realize the intricacies and I suppose the channels in which you could streamline trademarks and intellectual property and things like that. So what happened is that we, at the very simple step, we actually didn't set the right watch in global watches for our two main trademarks. And what happened is in China, a guy came in and trademarked one of our brand names, and he literally sold the rights to a couple of factories to start manufacturing products, and they had every right to do so then. So my advice there would be not only to choose the right firm to work with, but someone who understands international trade, not just someone who understands trade in one country. And as you're emerging into different markets, look at where your sales are coming from and then start to move with those markets. But most importantly, I think regardless of where you are, if you're in any type of physical product space, make sure that you trademark your company name and your brand name and any icons or logos in China first. Before you even move anywhere, because ultimately, if your product becomes popular, it's going to be knocked off there first, unquestionably.
Well, that's a gem of advice to everybody. I think that's certainly resonating with people. I have a specific question for you here, Blaise, on somebody's business. They're a videographer who is going to diversify now towards, they have been doing weddings, and they're looking at brand videos and social media videos for companies with a strong focus on storytelling. So do you see any other opportunities for video providers that they could be looking at, or industries to tap into now that they're trying to diversify outside of the wedding market?
Yeah, I think that, commercial business are going to, initially they probably try to do some of this stuff in-house, right? But, as they develop, they find that they just don't have the expertise in-house. So really, he needs to become recognized as a specialist. Maybe it's product, for argument's sake, or something else. He can be just a journalist. If you're a journalist, you're at the commodity end of the market. But if he could build a name, is it a he, yeah? If he could...
just check here.
The person anyway, whether it's a he or she. If they could be known to become a specialist in a particular kind of aspect of it, right? Then that's how you come up the value chain in relation to it, right? And you know, it's like anything. You start with one client, and you do a good job with that client. And you know, clients with all the social media now and video clips and all of that, everybody thinks they can do everything themselves. But there's a big difference between something that's professionally produced and something that's kind of amateurish produced. Okay.
Yeah.
And I think but he'd want to focus in maybe on kind of more medium to bigger type of companies rather than smaller companies, because early stage business just don't have the resources to pay the going rate, whatever the going rate might be in relation to that, right? So it's like anything, get one customer, do a good job with that customer, and that customer leads you on to the next customer and the next customer.
Yeah, well, certainly that's great advice for him there. Blaise, any thoughts on when you think that consumer confidence will come back after lockdown? Do you think it will be straight away, or do you think it's going to take some time?
You know, it's a very broad question, but I think there's a race on. I think there's lots of problems with vaccine and availability and all that at the moment. But I think over time, and by over time, I'm talking over a few months, I think a lot of that hot air will get out of that whole debate. And as soon as, it's like a marathon, you know, as soon as the two V's that I showed you there on one of the slides come nearer and nearer together, see a lot of confidence. And there is pent up demand out there, and there is pent up money out there waiting to be spent. And the whole idea for all of us in business is, are we going to be fit enough and attractive enough to get a bite of that? And I think it'll happen quicker than people think.
Here's a quick one for you. Do you think, Blaise, do you believe in paying down the debt or saving cash in case of that rainy day?
I think there's a balancing act, you know, because if you want to scale the business, let's say there's good opportunity post COVID, and you want to scale the business, you'll need all the working capital within the business. What a lot of people don't realize is that as one scales the business, you need more money in that business to support that level of business. Why? Let's assume it's a product business. You're buying more raw material, you're going to have more work in progress, you're going to have extra overheads and all that. Now you'll have a bigger business, but you need more blood. Like if I was twice the weight I'm at the moment, I'd need more blood in my body to support that. Okay? And the business is no different. As the business scales and gets bigger, it needs more money, not less. And one other thing, when I talk about money, is because this might be relevant to a lot of people. A lot of people would say to me, and I think it came up in the slide, but I bypassed it there. They said to me, okay, our accounts are showing that we're making a profit, but we have no money. If I've been asked that question once, I've been asked 1,000 times over the years. And it's a pity, because what that says to me is that the person that's asking that question, they actually don't quite realize the difference between profit and money. If you look at your profit and loss account, your profits are calculated on what's invoiced out, whereas money is real. So you could be showing lots of profit in your P&L account and have no money. So people can be under the misconception that profit and cash are the same thing. Now, if you're a cash business, because your profits are calculated based on your sales and the money is coming in at the same time, they're quite close. But if you're in kind of a contracting business, a business where you're selling credit, there's delayed payments, they're two different things. So just because someone is profitable doesn't mean that they have money.
Okay, I'm conscious of time, so I'm going to race through these. I see actually, Mike, you have your hand up there, Mike Walsh. Do you want to come in there, Mike, to ask a question? You can unmute yourself there. No, maybe not his own. Anyway, he wants to know, what is the best sign to tell you actually when you should sell your business, or what are the key indicators for that?
Yeah, very good question. And my advice to every business around the table here tonight is you should have an exit strategy. And there's three ways of exiting a business. One is to build a business to sell it. One is to build the business to pass it on to the next generation, or the other one is to milk the business until it goes dry. Okay, but let's assume it's the first strategy, and your strategy is to build a business to sell it. Now, my contention is that your business should be ready at all times to be sold. It's no different to selling a house. If you're going to sell your house, you'd have your house painted and appearing the best way it could, right? That'd be one thing. The second thing, I'm involved in a number of business, and one of the business we're involved in, an opportunity came by about 3 or 4 years ago to sell the business, right? We didn't want to sell it at the time, but there was a good offer on the table. Anyway, the sale didn't go through eventually for that particular time, but it taught us a lesson. And the lesson it taught us was that we weren't ready to sell the business the first time around. And why weren't we ready? Because all the ducks were not in order, right? And what we did, or the company did as a result of that, they got what they call the data room ready. What does a data room mean? It means a number of files. Every contract, the file were properly signed and filed. Every planning permission was properly filed and signed. Every intellectual property bit they had, every license they had, every documentation that was appropriate was brought up to date and kept up to date. So when a second offer came for that company 2 years ago, all of that was in place, and the deal went through within 2 or 3 months. Why? Because they were ready. They had everything ready when the due diligence came in. So I would say get all the documentation, all licenses, all planning permissions, all contracts of employment with employees, all, if you have customer contracts, make sure that every one of those is signed. And one of the messages we actually came up with that might be used to whoever asked the question was, in that company, they had some customers for nearly 20 years. And because they were consistent customers, they never had a signed contract with them. Now, in theory, they had a contract because they were trading with them all the time, but they had no formal signed contract. And when the due diligence came in and they were going through due diligence, they discounted the price we had agreed for the business by every one of those contracts that wasn't signed. They gave no value to unsigned contracts, even though the business was there. And that's what happens during the whole purpose of due diligence is to reduce the price that has, in theory, been agreed between the parties.
So get your house in order.
It's a game. It's a game.
Get your house in order, everyone.
House in order, exactly.
Blaise, we have a query here. This business has 2 dry cleaners in 2 different towns, and they're thinking of setting up a factory to reduce costs and increase quality control. Have you any advice for them on their expansion plans?
I'm all for expansion if people are ready and fit for it, right? So they would need to do kind of a fairly detailed costings on the whole thing to see if they can bring the unit cost down, right? So that's one thing. One of the ways of bringing unit cost down is to optimize the number of units going through the factory. So they'd have to look from the factory and what business model they might want for the factory. Is it just to support their own 2 retail units, or will there be excess capacity there that they could do processing for others as well? Because it's very difficult to get the unit cost in a production facility down to a competitive level if the capacity is not being maxed out on a fairly consistent basis. So I would say to do I'd be all for it, provided the figures stand up.
Okay, and just our last person there is going, they have twin 3-year-old girls going slightly purple in the bath, so they have to attend to them. So that's great.
That's right. I can't give any advice on that, I'm afraid.
I think that's mainly that's it now, and I'm conscious of time. So look at just on my own behalf, first of all, I want to thank some of the people that you don't get to see behind the scenes here. So my thanks to Karen Devine of White Light Consulting, And I also want to thank my own team, Breach Cosgrave. We have Angela Lawless and Michal O'Driscoll, who have been doing a lot of hard work behind the scenes. My thanks as well to our Leo Wexford ambassador for us, to Ryan Margolin, and for being so generous in terms of sharing your own tips and your journey. And as well, thanks to our master class from, of course, our renowned Blaise Brosnan. Thanks again, Blaise. All the various feedback has shown just what a great session it's been. And some of the people have said they've sat in on your earlier sessions earlier this week as well. So we're delighted. We're going to just finish up by saying thank you. There's still more events available for you tomorrow for local enterprise. Don't forget your local enterprise office. We all have teams. We're all here to help you with your business, no matter what stage you're at. And we're here as well to direct you whatever way we can and support you. So I want to thank you all, and just to play us out, we're just going to get a second go rerun at that video. If it works, Karen's going to try and play it out, which will just highlight again, hopefully with sound effects, what the business supports, what's available in terms of helping small to medium enterprises out there. So from us, thank you.
As your local enterprise office, we're your first stop shop if you're thinking about starting, growing or pivoting a business anywhere in Ireland. Your local enterprise office is an expert hub that provides access to funding, mentoring, training, support and guidance for all types of small businesses. There are 31 Leos nationwide, and we're here to help you at any stage, whether you're an entrepreneur who's looking to start a business, a new startup looking for additional support, or an existing business owner looking to pivot or grow. We can also help you access other valuable supports from local authorities, Enterprise Ireland and other state agencies. Visit www.localenterprise.ie to contact your local enterprise office and find out more. Together, we can make it happen.